Without a fully functioning banking sector, a healthy banking sector, it's kind of difficult to have a sustainable and strong recovery in the Eurozone and European economies. There is a two-way relationship. Clearly, the lack of economic growth is affecting the banks, the stability of the banks. On the other hand, without proper credit to the economy cannot actually take off. It is absolutely a chicken and an egg problem. So again, we need to have a proper, healthy and self-sustained banking sector in order to support economic growth, and the other way around. The banking sector in Europe is still rather weak. However, if we have to highlight two factors, I think first of all, the biggest test of all has been the deep and prolonged economic recession. The banks that have survived and actually are doing well now, you can say are very resilient. So they have gone through a very important stress test. Second, I would say valuations are pretty low right now. Some banks are trading at 20–25% of book value. So there is plenty of upside. These are the two strengths at the moment. There is plenty of weakness in the European banking sector at the moment. First of all, the stock of non-performing loans, which is pretty high, particularly in some countries. Why is that? Simply because after a prolonged and deep recession, many people are not able to pay back the loans, and many companies are struggling to do the same. The business model for some banks is obsolete because of technological innovation, because competition by other sectors. So I think there is a need for the deep change in the way the banks do their business. Secondly, I would say the cost structure is very high. There are too many banks probably in Europe. The number of banks is pretty high. The sector is very fragmented. So that needs to be streamlined. Over the next 2 or 3 years, there will be plenty of mergers and acquisitions in Europe that will change the horizon, will change the outlook for the system. Europe needs to fix the problems. There is still a need for capital. So banks, in particular in some countries, will continue to ask financial markets for additional capital to be in a better position. They have to work very gradually but forcefully to their non-performing loan position, because that is really impinging on their ability to provide profits, to provide return on equity, to provide some kind of profitability for the shareholders. The positive scenario is that maybe economic growth might actually surprise to the upside, which is, you know, what everybody hopes, but is not in sight at the moment. And in that situation, clearly banks would benefit a lot. And also it could be a two-way scenario in a sense that once banks get in a better position, they can actually provide more financing to the economy, particularly long-term financing, because what is really missing here is financing for investment activity, which is really at the root of economic growth. But unfortunately, there are no magic bullets. I think banks need to work on their business. They need to streamline, they need to reduce costs, they need to reduce the stock of non-performing loans. Policymakers need to help, provide some help, smooth the situation. And also I think the economy in general needs to get in a better situation gradually over time. Companies, for instance, they need to increase capital as well. They need to become more solid so that this would provide actually more stability also for the banking sector.